Hello, we're here to welcome you to WekWorks, another episode, and now we're taking it from precious metals to rare earths. I'd like to introduce my guest today, Richard Quesnel, who I've known Richard for probably 20 odd years, and he's got a hugely successful path in the mining world, and his operational skills are second to none, and his ability to work with the community, including First Nations and government, has been a real specialty here. I will disclose I'm a shareholder. I do investment banking for the client, and management owns about 30 odd percent. And I really like the fact that their money is where their mouth is. And the investment Quebec group called SOChem is a 20% shareholder, both of the equity and of the project. So pass it off to you, Richard. Talk a bit about yourself, and we'll go from there.
Well, Michael, thank you and good morning. Michael, as you mentioned, thank you for the introduction, but I'm basically a miner. I've been at it for almost 45 years. I'm an engineer, graduate engineer from McGill, but more than half of my career was spent with majors. So, from the bottom up, learning the trade from as an engineer and as an operator also. And then eventually I moved on to senior management roles. I was involved with many operations, of which some are world-class operations, such as Barrick. I was the general manager of Barrick at Barrick Gold Strike in Nevada for a number of years, all the underground operation. I've also worked for, at the time, Dofasco, Quebec Cartier Mining, Mount Wright operation up in the Labrador Trough of Quebec, also on the gold camp in Abitibi in northwestern Quebec. So I've been up in the trade. In 2005, I started off a company called Consolidated Lithium. Not Lithium, sorry, Lundmark. And that was an iron ore play. We started off the operation with about $2 million as seed money. And 5 years later, we got bought out by Clement Flint for $4.9 billion. So it was a huge operation and very successful as we speak today, still operating and growing. So that's a little bit about my career. And I got involved with the rare earth product projects. Started off in lithium in about 2023, joined the company. And eventually this year we made a transaction with the Quebec government to acquire the option to acquire the property of KGBO's property up in roughly about 125 kilometers northeast of Seven Island, again in Quebec. So that's a huge deposit, and I'll be more than pleased to talk about it.
Well, that's excellent, Richard. One thing I find that was really interesting here, your purchase price was $45 million, of which $30 million goes into the ground. And that is really unique. How did you get this? The Quebec government picked you. Was it your skill set in Quebec? Was it your skill set with First Nations or historical performance?
I think it's a combination of all that put together. Initially back in the 80s, I was involved with the Quebec government, Camp which was part owner of Barrick property, the Doyon mine. So it goes way back in terms of interaction with the government and ownership. And then I got involved also, with First Nations when we developed the iron ore property in Labrador, which is very close, about 250 kilometers northwest of this existing property. So we're dealing with the same indigenous group. But we were the first one to negotiate and sign an IBA on the Quebec North Shore. So there's a very good relationship with the Inuits of, we call them the Inuits of Manutenam and Seven Island, and we're dealing with the same group. So there's a lot of synergies that you can put together. And the fact that the property itself, there's been a lot of work done. SOChem did an extremely good job at drilling the property. And obviously, the footprint is a very small footprint, very high-grade deposit, and we'll talk about it. But it's an underground property to be developed. And again, some of the expertise that I've had in the past will certainly help put this thing into production.
That's excellent. So when you look at this, what you look at in mining is what is that rock worth and what does it cost you to produce it? Tojibo shows the highest heavy grades globally. And when you look at the type of products, you're looking at all the different, top line stuff as far as a replicate here. What are the major components of the composition of the asset, and what is the percentage grade? And compared against some of the bigger projects.
Well, it's a very compact deposit. Some of the highest grade, if you do comparables. If I would start talking about comparables, Linus in Australia is a huge producer. So is MP Material in California. But they're basically producing what we call light rare earth products, mainly neodymium and praseodymium, which are used for the magnets. And then the overall heavy rare earth component is very, very limited apart, from China. But we're talking about producing dysprosium, terbium, yttrium. And as far as the Kijibo project, doing the comparables, nobody comes close to the heavy rare earth content within that ore body. At least 34% of the ore body contains heavy rare earth. If we look at the light portion, neodymium, praseodymium, again, 20% of that deposit are concentrated within those two rare earth elements. So it's a very unique deposit in terms of structure. The grade is running anywhere between 2.75 to 3.5%. What's unique is that a good portion of it is from heavy rare earth components, and that makes it fairly unique. It's only been I would say drilled and defined from surface to about 300 meters, and it's very comparable to what we find in Sweden and what we call an iron oxide apatite type deposit, which is similar to Kiruna. Kiruna is a huge producer, and they're way down to an excess of 2,000 meters in depth. So there's a lot of potential. What's unique again with that deposit, the Kijibo deposit, is that the grade really improves at depth as you go deeper and deeper. Some of the deepest hole, which are still in the inferred category due to lack of drilling, are running in excess of 7%. So very similar to what you have with the MP and the Linus company deposits, but again, very different in terms of heavy rare earth content. If you look at those companies where they are at the stage where they're producing, their market cap are running anywhere close to $10 billion. We're a startup company. Again, we've just made the deal in November, got TSX approval this week, finalized this deal. So we're on the move, and certainly there's a lot of work ahead of us, but we're at the early stage of that development, and that ore body is, in my definition, is a world-class deposit.
This is unbelievable with the grade you have and the fact that you are, working with the Quebec government today. I would expect both the federal governments and the provincials to add some infrastructure grants. And if you look at the US, they put in $1.6 billion in very low cost loans to MP, which on the back of that, north of $1 billion was raised in equity. So we're looking at massive, massive values. What do you believe the NP value of the deposit? And don't go beyond 300 meters, just where you are today. What do you think with what you have, the value of the rock? And then we'll discuss the China effect.
Okay, well, I'll refer back, thank you for the question. I'll refer back to some of the work that had been done by SOCEM. Back in 2018, they actually did what we call a PEA, preliminary economic assessment of the deposit. In those days, they were actually using from the basket of rare earth that was contained within that deposit, a revenue based on roughly about $34 a kilogram or $34,000 a ton. In today's market price, if we were to look at the spot price, you're looking more at 42,000 US. So that there's quite a bit of an upside there. Their initial cost was estimated at roughly about $14,000 a ton or $14 a kilogram. So the delta is very attractive today. You're talking about, a differential that would generate earnings in excess of $350 to $400 million Canadian. What's
per year?
Yeah, that's on a per year based on a 10-year plan producing roughly about 10,000 tons of total rare earth oxide, which, about 2,000 would be NdPr, those magnets. 2,000 would contain the other elements, dysprosium, terbium, and yttrium. What's very unique on that deposit, due to the quality of the basket of rare earth content oxide that you've got in that deposit, 92% of the revenue will be generated with those 5 components: dysprosium, terbium, yttrium, neodymium, which are the magnet, praseodymium, which are the magnet. So that's where we stand as of today. Obviously, there's been quite a bit of global geopolitical activity going on with China, and there's been some restriction on selling of rare earth as we know it. And if we were to look at what's the spot price at Rotterdam and do the evaluation on the basket of rare earth oxide at TGBO, you'd be actually generating something at $150 a kilogram or $150,000 a ton. So you can imagine the difference. I think those prices won't be sustained, but it gives you an idea that $42 a kilogram today, and what you have in terms of economics, certainly as we build a mine within we estimate a period of about 48 months, would be north of $50 a kilogram. Well, our cost, if you look at the cost structure based on the PEA that was done, $14 a kilogram, you use the CPI index on this, you're probably close to $18 to $20 a kilogram. So that gives you a delta in what you can generate. So it becomes a question of throughput and output scenarios.
If I look at this and I say, okay, you have $300 to $400 million of revenue. Once in production, you have significant depth to drill down and expand the project. What would you put an NPV calculation on the company today?
First of all, I'm sorry, Mike, we're talking about $300 to $400 of profit, not revenue. Profit, so
so there's $300 million of profit.
Profit, yes.
Wow. I gotta buy more stock.
I don't know, but I'm really eager to get this deposit into production. To give you an answer, running back of the envelope, I call it reverse engineering economics. You're probably close to a 40% rate of return on a project which would require about $900 million today of investment to produce 10,000 tons over a period of 10 years with the known, MI, measured indicated resources converted into a reserve. To answer your question, probably you're looking at maybe 8% discount, $1.5 billion of value. Based on those numbers,
just based upon the lower price of the basket, that's $4 billion of profit over 10 years, $900 million of capital costs, which is an easy thing to achieve. Off-takers are going to be all over this, including the government for stockpile. Wow. And the market cap is $50 million.
45 roughly. But it's gone one direction. There's an analogy. It makes me think so much of when we developed the Bloom Lake deposit, with CLM back in those days.
Right.
The first major investment was roughly around $40 million, and then it ended up with $4.9 billion.
I think if we could replicate that again, I'm all in.
Well, there's an upside, but our job is to de-risk and enhance shareholder value for sure. And we're operators, we're entrepreneurs at the same time. We understand that we have to under-promise, over-deliver, and hit those milestones. But that's the direction we're taking.
Let's just talk about the capital structure quickly. How many shares outstanding?
Roughly about 450 million. We have went through our annual meeting with the ability to do a rollback up to 20-1. Now we'll change the shareholder base as we move forward, bringing in institutionals and certainly governments as we proceed. As we speak now, we're in the process of updating the PEA that was issued in 2018, and we expect this to be done by in the next 2.5 months, and then that will certainly trigger a lot of activity there.
Sure, the PEA will definitely create value. It will be updated. I totally like the fact of rolling the stock. What I saw was Talon Metals and Dolly Varden, who did the same thing. Their market cap went up by 20%. And I think that it doesn't matter how many shares you have outstanding, what it is, the value of the company. What is that enterprise value? And now with having this much capital in the company, a strong partner like SOCIM, insiders owning 30% of the company, stock symbol CLM trades 9 to 10 cents, right? Somewhere in there?
Yeah, we're trading in that range. And, to add to your comments, Michael, we also have one big institutional shareholder. Obviously, we can't disclose, they're below the 9.9 number. In this also deal, we have, a NSR with Iron Ore Company of Canada, which is 1.5%. So there's a lot of traction. There's a lot of interest. Obviously, we're in the right sphere, the right moment. The stars seem to going in the right direction, seem to line up.
I love the sector. The future is rare earths, magnets, the production of the defense industry, which everyone's raised their budgets to 5% of GDP. I see this as probably a number one small cap pick for anyone's portfolio, with a management team of Richard Quesnel and Brett Lynch, who is second to none, ex-CEO of Sayona. This is an incredible setup.
Well, you're talking about strategy and critical minerals. There's a lot of countries that are putting on their top list, including Canada, the US, Europe, their SAFE program, Japan, obviously, we know why, and South Korea, India also. But to give you an idea, in 2022-24, there's about 350,000 tons of total rare earth produced. Now we're looking at, annual growth rate in the excess of 8 to 10%. And give you, again, some kind of a background here. An F-35, for instance, jets that are being built or similar are using roughly about 500 kilograms of total rare earth. So you count the number of jets that are being built today. You look at submarines, Virginia class, they're going to consume roughly about 5 tons of total rare earth per year. You're looking at EVs anywhere between close to 10 kilograms per EV, depending on the size of the batteries and the motors. Turbines, energy transition. You're looking at 1,000 kilogram per 5 megawatt of consumption here. So we're going in the right direction. What's unique also is that some of those magnets that are being used, NdPr, are limited in terms of temperature. And if you don't put in some of those heavy rare earth, then you have an issue with operating at high temperature, and they get kind of demagnetized. So dysprosium and terbium, which is part of the heavy rare earth basket that we're talking about, are extremely fundamental in energy transition using, heavy, I would say, hot temperature magnets, and they reduce in size and they're much more efficient. So you look at the military, you look at the drones, you look at the EVs, you look at some turbines that are operating. On top of that, in terms of consumption, 22% of our deposit contains yttrium. Very, very hard to find yttrium these days. And they're used as coating and ceramic plating on, jets, motors. They're used on plasma, and the electronics. And the price has just skyrocketed. So we anticipated back 2 months ago that yttrium was selling at $22 a kilogram. Today, spot market on Rotterdam, because of the Chinese, is up to $350 a kilogram. I don't think it's going to stay there, but it gives you an idea of which direction we're going.
A lot of them is that I was hurt with an individual who produces tungsten, and a year ago the price was $500 a ton. It's now $3,500 a ton, sevenfold increase. And we're seeing that right across the board with what's going on in China. We're going to take a short commercial break. I want to thank Earth Labs and our sponsors, and we're going to come right back to you.
Do you want to be a part of the greatest treasure hunt across Canada? Somewhere between BC and Newfoundland, there's a treasure chest hidden with $1 million of gold coins in it.
And it's waiting for you. Yes, you.
If adventure's your game, join us on the Great Canadian Treasure Hunt. Be like the prospectors and pioneers of yesteryear that built this great country. Solve cryptic clues, and it will bring you closer and closer to your fortune.
To crack the code and claim the gold, you'll have to head out on the road and find it.
Start your hunt at treasure.northernminer.com.
Okay, now we'll go on ahead. All right, Richard, I'm going to close off here. And on closing, I think this is one of the best and cheapest attractive rare earth companies. I always ask this question: what risk do you see out there that can change your view here? Because I don't see any short-term roadblocks.
Well, I always took an approach where, you can't control pricing, but you can control your costs. Where do you position yourself in terms of tier one jurisdiction? Obviously, location, where you're at. You're in Timbuktu, or you're close to infrastructure, road, power, etc. Costs of power. So costs are extremely important, because when the market becomes volatile, you want to be the top or the lowest cost producer in the world, and I think we have an opportunity here. That's on the cost side. Where we have to be careful also is integrate our approach as to get the social license to operate. So in Canada, we're taking a very good approach with indigenous IBAs being negotiated with local tribes in the area to make sure it's a win-win situation. So that I think is something that we have to be careful. But again, the integration in the market is extremely important. You could be a mining, concentrate producer. We see that in the lithium field. But if you go the next step and you separate some of those products into the different ones that I've mentioned before, that gives you a lot more leverage. So, separation, extraction is important. I think Canada is going in the right direction. There's some companies out here that have the technology to do that. We know that China, refines, as we speak today, over 90% of all rare earth being produced in the world. So, a step in that direction, with Kijibo being developed not only as a concentrate producer, but integrating, in the separation side. And eventually, there are a lot of companies, in the defense sector or elsewhere that want to see the metal and they want to see the magnet being produced. So I think we'll go stage by stage, but it's important.
But you could see yourself. you could see yourselves refining or at a magnet producer at some point because the value in product is so much higher. And in your work of being in the mining world, you're in a jurisdiction where there's lots of refiners and processors up there. I know Electro Battery Materials is a company I follow, and they're looking to put in new circuits.
So a lot of those companies have got the technology, and you see the same thing in the U.S. You know, Ucore as another example, SRC, Saskatchewan Research Center, which produced the metal as we speak now, some metal in the rare earth field. I think you're right, but what they all lack, Michael, is substance, feed, and that feed has to be quality feed, and it has to be the right kind of feed. And as I've mentioned, Kijibo, heavy rare earth content is unique in the world, and that deposit has only been skimmed at the first 300 meters, and we may get some very, very positive surprise following drilling campaigns for depth.
When does your drilling campaign resume?
Well, we want to, we've already got it on a plan, you know. Our program is obviously would look like something like 6,000 meters for 20 holes at depth to be drilled this year. Obviously, you know, a note here, we need to make sure that we discuss this with the indigenous people. You know, today we consult them. We want to make them part of this success, so we have to have their approval as we move forward in the drilling campaign.
Well, excellent. This has been a great interview. Everyone, again, CLM, it trades in the TSXV. I would expect Richard at some point to upgrade to the TSX as you grow your market cap. Having the stock to be more reasonable with 20 or 30 million shares outstanding. And I think this company is for the future. Great to hear your story, and I look forward to seeing you in Toronto.
Okay, thank you, Mike. Thank you for your for everybody to setting this up.
That's great. All right, guys, this is WekWorks, another winning idea. I'm telling you, you wait to see. I'll bring him back in 1 year, and it'll be a huge surprise.
Thank you. Have a good day.
All right, we'll break again for another commercial break. Thank you to our sponsors, and again, thank you to Earth Labs and the team here. Thank you very much. Signing off.